Nice.
Hello, everybody. Simon Dixon here, and welcome to episode 80 of Bank to the Future Live, the final one for 2020. And today we're going to be doing 2020, the year in review, and looking forward to 2021. So just while we're waiting for a few more people to arrive, thank you, everybody in the waiting room. Why don't you let us know where you're tuning in from in the live chat. I can see a few of you there. So thank you all for joining us now. For me, just going to be moderating as always. And for me, will be picking out your questions. So let us know exactly what questions you have. But the main topic we're going to be covering is 2020 year in review. We're going to be doing it from a couple of perspectives. Obviously at Bank to the Future Live, for those of you that are familiar, that may not be familiar with the show, this is a show where we just talk about everything for our Bank to the Future investors. So we're going to be covering the Bitcoin and crypto markets in terms of investment trends from 2020. We're going to be covering what happened on Bank to the Future investment trends throughout 2020. And then we're going to be looking at 2021 from the perspective of both Bitcoin and crypto, and also the Bank to the Future, what we got in store and the roadmap ahead. So excited to get started. Please do like and share this video. It helps us. It helps YouTube rank us so that we can always increase the size of the investor community and new people can find that, especially as we start to end the year close to all-time highs in the Bitcoin market. So where did we begin this year? Well, what a crazy year it's been. In terms of the economic side, if you're a subscriber to my personal YouTube channel, you'll know that in 2009, I gave a presentation that was uploaded to YouTube in 2011 on my YouTube channel where I described the Great Depression of the 2020s. And it looks like we got it. Didn't know the exact risk event or systemic risk event that would cause it. But I talked about a black swan event happening in 2020, leading to the Great Depression of the 2020s, which would expose the financial system and lead to a lot of crypto and Bitcoin adoption. I think that we have got there. So it's interesting to see that this happened, but I didn't know it would be a global pandemic that would be the black swan event, and what a black swan event it was. And still is. So we began this year actually on a US roadshow. So at the end of last year, we were doing a China roadshow. I was giving presentations across China. And then we started the year with the US roadshow. We were visiting Miami. We were visiting New York. We were visiting San Francisco. And what a completely different world it was when we were going there to visit. And that then went off to Satoshi Roundtable, where all of the Bitcoin community gather, where it started becoming apparent that this thing was actually going to be something more serious this year. And so that was the last bit of traveling we did. Did a bit more in Europe, and then been in lockdown ever since. But at that Miami event, if you go back to the archives on the Bank to the Future channel, I talked about the investment trends that I was we were going to see. And one of the things I talked about is how this new emerging investment vehicle called DeFi, decentralized finance, had just passed $250 million locked up. And now throughout the year, I said that's going to be the big trend. And we've got now many billions locked up in decentralized financial products. That was a rocket ship. And then I talked about how there would be a regulatory crackdown at some stage. And that would lead to DeFi being combined with securities tokens rather than the tokens that are being issued right now. And then we go through the same cycle that we might have seen throughout 2017, but a different shape and a different flavor this time. And eventually you merge in these two different industries, which is the regulated industry that is complying with these regulations, and the decentralized industry, which is pushing the barriers of innovation in order to automate many of the cumbersome regulatory processes and allow for fully peer-to-peer trades. I think it was pretty spot on. I also talked about how security tokens were too early to get the adoption. You needed a couple more waves of regulatory crackdowns until you actually start to see that industry emerge. But the security token industry, while there is no liquidity, is certainly increased. And that is, I think, a trend that will be emerging throughout the next 3 to 4 years. So you can refer back to that presentation that I gave in Miami. It's on the Bank to the Future YouTube channel. I was talking about how Bitcoin and Ethereum would be combined so that people can start to take advantage of the best of Bitcoin with the best of Ethereum. And we did start to see that with more and more Bitcoins being wrapped up in Ethereum, which takes them out of the market. And then people started to actually access these decentralized financial products by wrapping their Bitcoin on the Ethereum in Ethereum smart contracts. And it actually got a lot more adoption than the scaling solution for Bitcoin, which was Lightning Network. More and more people, actually billions, are now wrapped up. Billions of Bitcoins are now, not Bitcoins, but billions of value of Bitcoins is now wrapped up in Ethereum. And I talked about the final trend, which would be the year of central bank digital currencies starting to come into play for political tools. And if we entered into the Great Depression of 2020s, a new monetary tool. So those were the different trends. And I think 2020 certainly paved that way. And I'd expect to see many of those continuing into 2021. The other real conversation that was happening in the early 2020 was whether Bitcoin was correlated to the stock market. And we got to see whether there would be any correlation. But the challenges is that because we are now moving to a fully non-free market, stock market, which is based upon central banks taking one side of the trade and investors taking the other side of the trade, and pensioners keeping, or pension funds keeping their money in the stock market because they know that the stock markets are now a function of stimulus and how much money the central banks are willing to go as we adjust from a free market, capitalist-based markets, to a more socialist-based markets where governments and central banks actually take the complete other side of the trade and don't allow markets to correct themselves, keeping assets higher, making the rich get richer, leading to more inequality, and not allowing people to get on the property or real estate ladders because they refuse to let markets crash to make things more affordable. We certainly saw that. And so we are now in a very, very shifting change. And if you're interested in those types of topics, I talk about them on a weekly basis on the Simon Dixon YouTube channel. But the real conversation is Bitcoin correlated to the markets. And what we saw throughout this is that immediately when the Black Swan event, the pandemic started to take shape in terms of the impact it would have on financial markets, we started to see big corrections in gold, Bitcoin, and the stock markets. But the stock markets were stimulated back up. So I think Bitcoin and gold went back up for the right reasons. But the stock market went up because of funny money being injected, which is actually mass manipulation of stock markets, and can lead to all sorts of things down the road that can really create, a black swan event into a lost decade and a real, 1930 style moment in terms of the Great Depression. Now, remember, I tell you these things because I want to be realistic, but I also believe that the industry, financial technology, is going to be the industry that benefits from being able to make shifts and changes, both in two areas. One, fintech that actually supports the regulated industry and the banking industry to become, more technology plays. And secondly, creating competition within fiat currencies and banking, which is what we're seeing with Bitcoin, and decentralized financial products all being built on top of Ethereum as kind of a movement, a rebel capitalism, let's call it. away from some of the status quo and challenges. But Bitcoin turned out to be pretty correlated to the stock market, but I don't think we can read too much into it, because I think Bitcoin and gold went up for one reason, and then the stock markets went up because of manipulation. So they started to move together, and stock markets and Bitcoin started to reach all-time highs at the same time. But I don't think it's it's challenging, because we're analyzing based on real markets, but now we have completely manipulated fake markets. Another thing that started to happen, 2020 was the big year for Bitcoin. I said many people were asking me what would happen during halving. And Bitcoin halving, for you will know, is where every 4 years we have a supply shock in Bitcoin. It's not so much of a shock because it's actually algorithmically programmed into the protocol and can never actually be changed unless it reached consensus from the Bitcoin different parts of the ecosystem, which is such a contentious thing that is virtually statistically impossible to ever change, giving Bitcoin that fixed supply. But you get retail people jumping in because they hear about halving for the first time. I've been through 3 halving events now, and you see the same thing every time. New people discovering about it, which is essentially the dumb money. The dumb money comes in trying to make a pump, and then you have a non-event during halving where everyone expects it to pump because you get the supply shock where the Bitcoin mining supply actually contracts. And then it takes about 6 months to capitulate out all the dumb money. And then the smart money comes in, which we certainly saw. And you start to enter into a bull market approximately 6 months after halving. So that was what I talked about would happen. And that's exactly what did happen. It continued into a bear market. We entered into halving. We started to see corrections. And then suddenly 6 months later, towards the end of the year, you started to see massive interest from a lot of corporate interest. So public companies applying to add Bitcoin to their balance sheet. And rather than what we saw in 2017 during the last bull market, which was retail driven, which was everyday people mainly trying to get into what they consider to be a get rich quick scheme, and getting that 3-year bear market because Bitcoin went up too high. This time it was actually been driven by corporate. And the difference between corporate and retail is I'd expect with corporates to have less capitulation, a longer term time frame, and deeper pockets and balance sheets, rather than the retail people, which you expect to buy at the top and sell at the bottom as they start to get despondent, that we saw throughout the bear market. So halving happened with the crypto markets, and we ended the year as we entered to the end of the year. With what many people would certainly consider the definition of a bull market. And I expect that to continue into 2021 with all the volatility that we always see, taking out the weak and bringing in the fearful, and people putting in those trends as well. So I'm expecting that to continue throughout 2021. I don't normally talk about short-term timeframes because I'm not a short-term trader. I'm an investor. But that's what I expect to see. I think 2020, if you wanted to sum up Bitcoin, I think you would call it the year of the corporate interest. We started to see all of the same corporations. So if you look back at 2013, PayPal made their first announcement that they were trying to get into Bitcoin. They did integrations with a couple of our portfolio companies. They did an integration with Coinbase in 2013, and they did an integration with BitPay. Both of them are Bank to the Future portfolio companies. They then did that for a little bit, and then they disintegrated. The one company that they also integrated with was another one called GoCoin, which I'm not sure if they're still around. Haven't heard much from them for a long time. I believe they actually moved and relocated to the Isle of Man, if memory serves me right. The difference this year, now PayPal has got involved again, allowing people to get into Bitcoin in a closed loop, which I expect they will open up eventually. This time, it was driven actually them doing direct integrations without the financial technology companies in the middle, or the Bitcoin companies in the middle. So that started to actually pick off an appetite for more and more corporations to associate their brands with Bitcoin by taking some of their reserves and holding it. We got the announcements from MicroStrategy and Square and various other companies, and now we end the year where every week a new billionaire jumps onto the Bitcoin bandwagon and says. Especially, I think the highlight was when Paul Tudor Jones, the legendary hedge fund manager, came out and said that he's putting a percentage of his hedge fund into Bitcoin, which really drove a lot of other hedge funds to have to try to compete with a hedge fund, a very reputable hedge fund that owns Bitcoin, which drives up the competition within the hedge fund industry and really capitulated a lot of hedge fund managers, a lot of corporations, and a lot of companies to try and use Bitcoin as an asset class to try and improve their returns. As well as hedge against some of the dollar exposure as we enter into these uncertain times. So it was a year of corporate interest in Bitcoin, certainly. And then on the fringes of financial innovation, we saw the DeFi, decentralized finance industry, go through similar things like we do with many crypto innovation, lots of scams, lots of genuine things that actually provided value, like decentralized algorithmic stable coins, and lots of problems and smart contracts and moving fast and breaking things, and creating crazy ultra high return, ultra high risk speculative opportunities, and a frenzy of speculation around that from people that have no idea what they're putting their money into, but are driven by the ultra high returns. So we certainly saw that. And then we had a cooling down towards as Bitcoin started to jump into a bull market. So that's my analysis for 2020 in terms of the Bitcoin and crypto markets. As always, happy to take any questions as we go through this. Famida will take some, and I'll move into the second section, which was Bank to the Future throughout 2020. So in terms of pitches live, we ended with quite a few pitches. We started the year thinking that there would be a huge hit as a result of the pandemic in terms of how many people wanted to build a portfolio in the fintech industry. And immediately we started to see a decrease in terms of the number of investments that were being made through the platform. And then it started to siphon off, and we are now approaching almost $900 million invested through the platform. I think we're approaching $865 million now in rounds listed on our platform. And towards the end of the year, we started to see increase. Halfway through the year, we had one big trigger pitch, which created a real investment frenzy. We at Bank to the Future were not so prepared for that, unfortunately. We had some people leave the support team due to COVID, and we also had, we were cutting back in terms of being more frugal. We didn't let anyone go, but we didn't expand the team like we were actually doing. And then when we started to get a real big frenzy of investing, we were caught a little bit off guard. Our support started to suffer. So apologies if you were on the wrong side of that. But now we've been doing some pretty, we started advertising roles, and we started to bring in more people into the support. So if you got caught on the wrong side of that, we want to do a better job of that throughout 2021. In terms of pitches, we recently, in no particular order, in reverse order, we just closed the yield pitch, which was a non-US pitch. Most of our pitches were open to US investors this year, but whenever there's a token involved, unfortunately, due to the regulatory environment, which we believe is going to change in the US, Jay Clayton was the chairman of the SEC. And he was a very crypto adverse, not very crypto friendly, leadership team in terms of the SEC. But now that's being replaced with a more crypto-friendly leadership team. I think we'll see an ETF as a result of that, which is what many people in the Bitcoin industry have been looking for, because an ETF is what created the big gold bull market last time, when it gave easy access to pension funds to be able to invest in this asset class. So I think we're going to see a change in that. But Yield was a non-US pitch. It was a platform, a centralized platform for aggregating and giving people exposure to DeFi. We had Aqua, which was an all-star lineup team. If you look through the previous episodes of Bank to the Future Live, you can see all of our interviews with the leadership team at these different deals. But that was around giving people a team that were involved in many traditional financial markets, like contract for different products, that are now launching the ability to invest in human capital and humans using traditional financial products. And we look forward to seeing where that goes. We also had First Digital, that we're a strategic partner with, and we're going to be working with them in order to give additional protections through trust structures to client funds, and also working to actually build out our retirement planning products that we'll be talking about throughout 2021. Chronicled is a previous deal that did their next funding round, raised a couple of million. We opened up BF Global to our investors that missed previous funding rounds. We hadn't done a funding round since 2016, bringing the valuation of the BF Global group up to $250 million. And we are very grateful to the 380 or approximately 400 new shareholders that we brought to the company. We are very grateful to have you. We closed off that round, and we'll be working on issuing share certificates towards the end of this year, and also going on into January. Also looked at a security token pitch, built Infinite Fleet, which was built on the Liquid sidechain, which is a innovation on top of Bitcoin, created by Samson Mao, which is one of the CSOs, or the CSO of Blockstream. And the big pitch for us was the Celsius pitch that attracted over 1,000 investors, attracted over $20 million, with the lead investor being Tether. And what an explosive growth path they went through this year. They started this year trying to, I think they've ended this year. They went from $1 billion assets and loans, and now they're over $3.5 billion. The token connected with Celsius had explosive growth. And the company, while we're closing that, we closed that round. And I think already just in the 6 months, there's been an incredible increase in terms of the value of the company from that team. So we look forward to seeing the growth of Celsius from here. We also had Layer 1 trying to create more diversity. There's been some public challenges around their leadership team entering into legal cases and IP cases. So that's been a little bit of a messy situation for us to navigate. But we'll continue, if you invested in that deal, to actually post any updates that we receive from the leadership team as they work through their challenges as well. We did a live AMA for shareholders with Alex, the CEO, to give his perspective on what was going on there. And so everything we're talking about is the publicly available information. We also had Robinhood, which was an early deal that we did. We did the round at the $8 billion valuation. And this month they had an announcement that they're looking to IPO. They've just engaged, I believe, Goldman Sachs to do their IPO at the $20 billion valuation. So huge returns as that starts to potentially be one of the first companies on Bank to the Future that ends up going public. So congratulations to all the Robinhood investors. We also just had secondary markets that we pushed out, in order. We started to see, low liquidity on the secondary market. But towards the end of this year, as we launched the Retirement Plan B product, and we started helping investors understand a better way or a more concise way, a more strategic way of building a portfolio and understanding how to build retirement plans and products around Bitcoin, crypto markets, and different ways of doing it, we started to see an uptick in liquidity. So we're those of you that have had some sell orders that are looking for liquidity on some of the secondary market deals, you'll notice there's been a bit of an uptick throughout December in terms of activity there. Still very low liquidity, but we look forward to that being a very strategic goal to push throughout 2021, and also enhancing the products that we've got some new products that we're working on for that. But Bitso was launched onto the secondary market. They just announced a $62 million funding round as they approached over $1 million, being the largest exchange in the Latin America industry. So huge growth that they've experienced. as they started to get through some of the regulatory challenges, and they've navigated it to perfection so far. We also had Kraken on the secondary market, Shapeshift, Bitfinex, Ripple Labs, BitPay, Blockchain.com, and others as well. We also discussed, so we started planning throughout 2020. If we think that less people are going to be investing, we started thinking about our hedging strategies. And we started putting together the Retirement Plan B brand, which we launched in December. And the Retirement Plan B free video series explaining and helping people understand how to invest throughout, or how I'll be investing throughout the Great Depression of the 2020s, has been so popular. And you can access that free video series in full today at retirementplanb.com. So we were great to launch the Retirement Plan B brand. And we're taking on our first set of customers that want to actually go through the Retirement Plan B online coaching program starting today. Already over 90 people have actually registered for that in the last, and we only opened it about an hour or so. If you're on the Retirement Plan B mailing list, then keep an eye on your email. We're going to be sending out an email giving you a notification that that's actually opened now that will be open for the next few days for those that want to enroll on the coaching program as well. So yeah, more deals on the secondary market. The last pitches are live now. We're going to be closing. We've closed approximately 4 of the pitches this month, and we've only got 2 more that we're going to be on the platform. And then that wraps us up for Christmas. And we'll be making some further announcements around different regulatory applications that we've been making, taking a little bit longer, but we'll be making further announcements to our investors. But don't expect to see any more pitches until 2021, and we'll be giving some further updates on our plans around there. It was definitely the year of the unicorn at Bank to the Future. We had Ripple Labs close a funding round at $10 billion valuation, and they still hold, approximately 50 to 60% of the third largest cryptocurrency XRP on their balance sheet. And so it's still trading at a significant discount to the assets that they actually hold on the secondary market. But congratulations to everybody that got in at a significantly lower valuation on our secondary market. And now the company from the last funding round is valued at $10 billion, which is a significant discount to the assets that they actually hold. We talked about Robinhood. Coinbase reached the $8 billion valuation as well, and they started to make announcements about them going into pre-IPO. So it's going to be a bit of a race between Robinhood, Coinbase, and also Ripple Labs made a pre-IPO announcement to be the first company of Bank to the Future portfolio company that actually ends up going public. So we're glad to see that we've now got those multiple multi-billion dollar valuation companies in our industry, which, been involved in this industry for a decade, the world's first crypto securities business and the longest standing company to survive in Bitcoin. It's really great and a real honor and pleasure to be able to just have been a part of supporting these companies in, just create this whole new industry and just getting to that level of valuation. For those that have been early investors from our platform right from the beginning, you'll remember how hard it was to actually find investors that were actually interested in investing in this industry. And now it's great to see some of the early adopters that are actually getting those rewards and proving the use case that we talked about all along at Bank to the Future, that the money's made in the long term, not in the short term. So that's the Bank to the Future year in review. And just before we start to move to the AMA segment, let me check how we're doing for time, about the halfway mark. We'll look forward to 2021. As I said, this is going to be the last episode for BF Live that we'll be doing Bank to the Future Live in 2020. And we're really excited about the new products. So Retirement Plan B is the new sub-brand. And we're going to be helping people structure how they can actually start to build a retirement plan If you want to go back to previous videos, we covered this last week on BF Live, and check out that 4-part video series on retirementplanb.com if you're interested in putting some structure, some structuring, figuring out, tax, legal, and all that type of stuff without us being able to give financial, investment, tax, or legal advice. We'll be going through the structures that I'll be using throughout the Great Depression of the 2020s. And I'll be doing that live with $1 million of my personal savings, so that anyone that wants to follow along and understand that certainly can. We'll be looking to push forward with the secondary market, a few more tweaks and changes that we want to make. And so we'll be focusing a bit more on that as it starts to get a bit more of an uptick. As I said, liquidity is low. There's lots of discounted opportunities for the long-term investors on there, but we want to help people understand how that actually fits in with their portfolio and make it much easier for people to build diversified portfolios. So if you've got some sell orders and you're looking for liquidity, the liquidity is not quite there yet, but we'll be looking to push that throughout 2021. And we've got some additional, regulatory applications that we'll be making in order to make new products that we think are going to improve that as well. Obviously, the biggest thing that we've been promising for a long time, and we keep getting pushed back because of regulatory changes and upgrades we need to make to stay on the right change of, 2020 was a huge regulatory shift globally. And we've had to keep up with that. And every time we want to build out the portfolio, we've had to actually focus more on compliance features, which the end user doesn't actually see, but it allows us to continue delivering this service to a high standard and meet the high standards that we need to meet in this industry. But in 2021, it's all about us building products that can be open to a wider market. Sometimes we're going to have to open it, in order to comply with many of these requirements, we have to cut back slightly in terms of who we can offer. But all of our strategic goals are around bringing it and opening it up to a wider market and launching products that don't necessarily are just restricted to the high net worth investors that we are at this stage. But we'll be looking to do that. Also, we talked about our strategic goal that the Bank to the Future token certainly hasn't really got the traction that we wanted it to gain. And the reason for that is because we integrated it with a use case that our investors use and love and is popular. But because of the products that we offer, it's not a mass appeal product, it's a niche product. So our strategic goal was to launch mass appeal products. Once we've got that traction, then we can start to look at the use case of the Bank to the Future token. And we've been starting to speak to different technology teams that can allow us to actually fulfill some of the original vision of the Bank to the Future token. So it's not been a great use case that has been built up until now. It's actually worked for our users, but we need a lot more users to actually build a network effect around that. So that's our strategic goal for that. We'd love in 2021 to pass the $1 billion mark as well. So we're currently on the $865 million invested through the platform. And I think a strategic goal for us throughout 2021 would to be get over that big psychological great goal for us to get over that $1 billion mark as well. So that's the Bank to the Future 2021 roadmap. That's what we'll be focusing on. Again, the patient investor is the one that's going to benefit from that should we achieve all our goals, because these regulations, thankfully, we've always stayed on top of getting the right balance between innovation and compliance, which has allowed us to stay this long. And we want to continue for another decade, certainly, and make sure that we get all this right as more and more regulations come in throughout the 2020 period and beyond. So what am I expecting for Bitcoin and crypto markets before we go into the AMA part of it? Well, I think that we're going to see a decentralized finance regulatory crackdown throughout 2021. And I think that's going to drive greater innovation and also enforcement action from those developers that are not thinking that they need to comply because things are decentralized. I think we're going to see a bit more of that. But I think the pandemic actually slowed that down because regulators were trying to figure out how to adjust their systems to work in virtual environments, which such as fintech companies have been doing for decades. And regulators were telling us, we want you to be in offices. Isn't it ironic that it all came round that now regulators are running virtual outfits and are figuring out how to adjust and learn from many of the practices that our industry created in terms of running virtual teams globally. I think that we're going to see governments that want to. I talked about 2020 being the year of Bitcoin accumulation for corporations. 2017 was retail. Before that, we had different phases. But I think 2021, 22 and beyond, you're going to see Bitcoin as a strategic investment at the sovereign level. Governments looking to acquire Bitcoins to enhance their balance sheets. And I think you'll start to see smaller governments actually start to make announcements around that. May not happen too aggressively throughout 2021. But as we enter into the Great Depression of the 2020s, I do expect to see currency wars and Bitcoin being used as a political tool in order to remain significant throughout these. And I would expect a small government or a small country to be able to accumulate $1 billion plus of Bitcoin, make a strategic announcement, and try and in the future become a statistically significant through the HODL strategy that individuals have been implementing that has made such a wealth, a wealth shift in people that have actually been involved in this industry. I certainly expect to see more announcements in central bank digital currencies, and I expect to see a central bank digital currency being used to inject money through modern monetary theory directly from a government to take out banks as some banks start to expose their liquidity issues that we will see as the Great Depression of 2020s starts to cause some people in this rich-poor divide to start defaulting on their rental payments and therefore investors defaulting on their mortgage payments and only, this inequality gap just increase as a result of all the money that's been pushed in from the Federal Reserve, which helps the rich get richer by driving up their asset prices, and the poor continue to be poor by actually not being on the right side of these asset trends on the fiat money regulated Ponzi scheme, the world's largest regulated Ponzi scheme that's driving this inequality gap. And I think central bank digital currencies will be used as a new monetary tool and look forward to automated tax collection, automated negative interest rates, automated compulsory vaccines connected to your central bank digital currency, connected to your passport, and a more Orwellian 1984 style movement towards more government involvement in our financial affairs, as well as everything else as a result of this pandemic. And as I said, my outlook for the actual reality of the economy is the Great Depression of the 2020s. But as I also said, as we move to less of a free market, less capitalism, and more government intervention, more money printing, and more intervention in markets, you'd expect that rich-poor divide to increase as a result of it, rather than allowing the markets to correct themselves. And so I think that could lead to the Great Depression of the 2020s at the economic level, but that doesn't mean that the governments won't use that and central banks won't use that to inject money into into trying to push assets ever higher, as all governments around the world globally have shown an appetite to not let markets correct themselves in real estate, in stocks, in bonds, and they're running out of monetary tools. So I think central bank digital currencies is the final tool there. So that's what I'm expecting to see. That's what I saw throughout 2020 and throughout as we move into 2021. And now I think this is a great time, how much time we got, to take as many questions as we could. We started slightly late, so let's see how many questions we can get through. Famida, have you got questions for us?
Yes, I do. John Lorando is curious as to where your stuffed cat is.
Oh, Simon's cat. That was actually a gift from Famida. And I think we have to bring it out again. I had quite a few people that were saying that is that a photo? I think the only way we're going to be able to prove it is put Simon's cat on the table But then they'll probably say that's photoshopped in, but we'll get the original Simon's cat back. Yeah, we were doing a lot of refurbing, and the lockdown really caused some issues for us in terms of, I can't complain because, I'm not going to complain about some of the things that people around the world have had problems. But, the lockdown caused a few challenges for us. So we've just been living out of different suitcases, different rooms and stuff. But we'll definitely bring Simon's cat back out. And thanks, Hamida. That's my favorite gift.
Aww. It's too cute. It's very cute. Maybe you can sit at the dining table, which you've had some comments about. So
yeah, we have to bring the ovens back.
Dining. Oh yeah. The ovens, the 12 ovens that you have. All right. So look, you've already mentioned about the BF token, but we have got some questions about how that the weight of it will increase, or like the value of it, how will the value of it increase? So a particular question from Gustafu is a potential that Bank to the Future token could be used as access to a weighted portfolio fund of the companies in secondary market.
Yeah, so if we were to do that, then that would make Bank to the Future token a security. And if it were a security, it would get delisted from all cryptocurrency token exchanges. So by making it an investment product and connecting it to securities, we would have to have a very buoyant security token market in order to make that move. Because at the moment, the security token market is virtually just non-existent in terms of liquidity. And so you get much better liquidity on Bank to the Future through traditional equity products than actually using security tokens at the moment. So for us to we want to keep the Bank to the Future token as a utility token and make sure that it's used to be able to reward people to the masses. But the challenge right now that we have is that Bank to the Future is a very targeted group of investors. It's a niche because we can only work for regulatory restrictions with a smaller group of investors. So we wanted to bring our products to the masses and then use similar use cases that we know our investors like as a rewards token, a membership token, and a way of staking up tokens to get priority access to deals. But once we've got a mass appeal product and the regulatory situation becomes a bit clearer, then we can be a bit more aggressive in terms of how we actually utilize the token and allow our token holders to actually benefit from all the use cases that we would like to do. We'd also like to have another stab. We failed at the whole decentralized due diligence and investor relations side because just nobody was using it, and it didn't really provide much value, and it didn't provide any interesting intel. But I think in the future, we'd like to have another stab at seeing if we can get a network effect around that particular use case. But again, it all depends upon having a mass appeal product, which Retirement Plan B, from the early indications, is actually starting to do that. We've noticed a significant uptick in interest by us actually, creating this product that more people can get access to, rather than just the niche product of securities.
Okay, so a question here from Annalise. What prospects do you have for the euro?
So, I mean, the way that I think about currencies is as follows, and I talked about this. If you watch video 1 at retirementplanb.com live right now, you can check it out. It's about a 25-minute video. But the way that I think about things is, if you live in Europe, then you need a set amount of euros to meet your living expenses. And your goal should be to end up with a sufficient asset pool and a safety bucket. And that safety bucket is non-volatile currencies. And by volatile, I mean that they don't fluctuate in value relative to how you have to pay your rent or cover your mortgage or meet your living expenses. And people should be trying to increase that safety bucket, especially in these times when such debt levels has exposed that, the vast majority of the world are living month to month because of this debt-based Ponzi scheme. And so I'm only interested in euros if I live in Europe and things are priced in euros. Other than that, I would be looking at, if I wanted to build a portfolio in the traditional markets, I'd be looking to doing that with the existing world reserve currency, which is dollar denominated assets. At the same time, no fiat currency has ever survived. So therefore, you need to hedge, because I think we're at the end of a debt cycle where we might get a big shift in the dollar. But I don't like betting against the Federal Reserve, because that's a challenging bet. So you start to look at asset classes that would perform, or currencies or money that would perform during changing times. I look to gold for that. And then you've got to look at the above normal asymmetric returns, which is where you build a Bitcoin denominated portfolio, because gold can end up in lockdown, confiscation, all sorts of stuff, as it had during other Great Depressions. So for me, euro is a unit of account and medium of exchange that you should have to meet your living expenses, and knowing that it will depreciate in value the longer you hold it. And so you shouldn't really be saving currencies. That's why it drives people to actually making investments, because currencies always go down in value. But if you are thinking, you've got to separate your spending money from investments in currencies. And so the only reason I would ever be holding euros is if I was actually living somewhere where everything I have to spend money on is denominated in euros. That's the way I think about it.
Okay. So we've got another couple of questions around currencies, actually. So Levy has asked, are we really seeing people sell off gold to buy Bitcoin?
I don't know whether people are specifically selling off gold to buy Bitcoin. I think that people would, people that have gold are probably wealth enough to buy Bitcoin as well. And there's different demographics in the gold markets. You've got countries like India where almost everybody holds some kind of gold as their pension plan, due to other financial products that they don't trust. Turns out that they're pretty right about a lot of stuff, to actually do that. But are some people selling gold? I think most people, because gold is so hard to store and accumulate, once you've got it, it's very, you don't really want to take it out from wherever you're storing it, whether that be in custody or whether that be, it's a very hard thing to store. So I don't think people do that. Now, one of our portfolio companies, Voltoro, have actually created a really easy way for you to trade between your gold and your Bitcoin. And that's a two-way that they're doing a lot in the gold to Bitcoin markets. So I think what we'll do in 2021 is try and get Josh back on the show to see what traction they saw. And I'd be really interested, as a result of the pandemic, to see how the whole gold to Bitcoin pair is doing. But I think they've been experiencing some pretty interesting growth. They saw a massive shortage in gold where nobody could get physical gold. It's very easy to get paper gold. Remember, paper gold is not the same as physical gold. It's very hard to get physical gold. The Chinese government and the Russian government are trying to accumulate every ounce of, or every ton of gold that they can get their hands on. And you're competing at that level. So I don't necessarily think that they're selling it to accumulate Bitcoin. I think that they'll be enhancing their gold position using Bitcoin, because Bitcoin has kicked the shit every year on year, for 10 of the last 12 years, being the highest performing asset class to gold investors. But gold is not meant to go up in value. It's meant to preserve your wealth, because for 5,000 years, it buys you the same amount of goods. Whereas ever since the dollar, if you kept your dollars even just the last few years since it went off the gold standard, it now buys you 95% less than you could before, when the dollar was pegged to gold.
Bringing you the facts right here. All right, so question from Prakash. I've noticed on Whale Alert lots of USDT transactions. Is there any benefit in investing in USDT?
So USDT is a mechanism for keeping your money in crypto. The company that's one of our portfolio companies, Bitfinex, the same management team created Tether. And Tether is now a multi-billion-dollar stablecoin that paved the way for all of the innovation in the stablecoin industry. One of our other portfolio companies, Circle, created the USDC stablecoin, which has now become the second largest stablecoin in the industry. Both of those are available on our secondary market, Bitfinex and Circle. I think stablecoins, it's been an amazing year in 2020 for stablecoins as an offboarding way out of fiat without having to take fluctuations and volatility risk. And also there's been a lot of innovation from other of our portfolio companies like Celsius, giving you the ability to earn yield on your stablecoins, and building and lots of innovation around that, as well as the decentralized stuff that we talked about as well. So Tether is a great way, I believe, of people getting dollar exposure and being involved in the crypto markets, but you need to accept that it's got counterparty risk, as do all deposits in a bank. Anything that involves fiat money means that you don't own that money, because anything held at a bank means that the bank owns your money. And so if you want exposure to the dollar as an asset class, then a stable coin is a way of doing it, but it also involves the counterparty risk of the issuer that you need to be aware of. So where that fits in within your portfolio, I do think it has a place. And it's people use it during Bitcoin bear markets as well to try and protect themselves from some of the downsides of Bitcoin. But I think stable coins have a role as part of a portfolio. And I talk a bit about that in video 3 on retirementplanb.com.
All right, so actually a good question to go on from there is a question about tax from James Kilgarath. Do you think that the government will increase tax demands on Bitcoin holders?
The government's going to increase tax on everything. You're going to get higher corporation tax, higher income tax, higher VAT, higher capital gains tax, higher, and whatever your tax structure is for holding Bitcoin, however they classify it in your country. Governments have two choices today. They either tax more or they use the central bank to devalue your savings by printing more money. Those are the only two ways of continuing this level. They obviously choose inflation, where they devalue your currency and your savings over tax because it's easier to get votes. If you tax more, then it's a lot harder to get votes. So therefore, you have to pretend that you're not going to tax. But right after an election cycle, you're going to get increases in taxes. That's for everything. And so, yes, the importance, and that is another trend, certainly. If you haven't figured out or sorted your structure for your crypto taxes, now is the time to start thinking about it, because when governments are broke, as they are today, they're going to look for the next big money grab. And the next big money grab for government is crypto tax. So if you haven't been paying your tax or you haven't been declaring those, it really is time to get a tax advisor. They're hard to come by. And it's really, really important to make sure you get the structuring right. And I'm not talking about tax evasion. I'm not talking about doing anything illegal. I'm talking about making sure that you're doing things in the efficient structure. And one of our strategic goals is to be able to, bring products to our investors that make sure they structure things in the right way legally, so they don't have to worry about it. Because I know a lot of people are concerned about it just simply because they didn't want to do anything wrong with their tax, but the governments or the tax authorities had no idea how to do it. So now is the time to start thinking about these things, structuring them in the right way, and making sure you're investing a bit of time into making sure you solve that problem if you've got caught on the wrong side of that. The other part of that argument is don't trade. The more you trade, the more you're going to have to deal with these issues. The easy way to do that is fix your challenges and just don't trade. Because every time you trade, you create a taxable event for yourself, and a bigger problem to solve later. I can't give you tax advice. I'm not a tax advisor. I just pay some very intelligent people to help me plan these certain things. Unfortunately, I have to always give those disclaimers. I can't give financial advice. I can't give investment advice. I can't give legal advice. I can't give tax advice because I'm not qualified or registered to do any of those things. other than having previous qualifications and just being direct experience. So, but the structures, they are pretty, generic. And then you still need to be able to get your unique advice, because everyone's situation is going to be completely unique.
Right. So actually, I have a question for that then. So say you do go looking for a tax advisor or an accountant to help you out with the Bitcoin that you've just recently invested in and you want to trade. So how do you know who is actually genuinely informed about crypto currencies? So if you get a tax advisor or an accountant, what if they're bluffing, and how do you know that they genuinely understand how this translates over to fiat?
Yeah, this was I actually covered this this topic of when I talked about on my personal YouTube channel, that when you move from money problems of trying to have more money to when you have money, the problems you have to have. And one of the biggest problems is trying to find the right advisors. But a rule of thumb that I tend to use is I like to work with advisors that are actually doing the things they tell us to do. So it's finding those advisors that actually have the right client base, that actually are, using the same strategies themselves. And so that's just a general rule of thumb that I like to use. I don't like to have a personal trainer unless the person looks what I want to actually look like or feel like, or how healthy they are. And so if I want to judge whether I should be taking dietary advice from someone, I look to how they're dieting themselves and how it's working for them. So same with advisors, really. And one of the big strategic goals at Retirement Plan B is to help people understand some of the challenges so that they can ask much better questions when picking their advisors, because half of the challenge is just not knowing what to ask.
So are there actual tax advisors that are advising about your crypto assets?
Yeah, there are people that have specialized in these different areas. Adam Vaziri was the first crypto lawyer. That's why we work with Adam for that. He was one of the first in the world. And we've been, as part of Retirement Plan B, we've been going out to lots of different jurisdictions and doing the hard work for you, and trying to speak to as many tax advisors and ask them the questions that we know they should be asking, so that we can build a bit of a network of people that we think seem to be giving the right advice and doing the right things.
Nice. Okay, so moving to Retirement Plan B. So we have somebody who's asked here. Philippe has asked, mentioned, I want to get a pension scheme backed by Bitcoins. Is your pension product structured like that?
So this will be the last question we'll take, because I think we're running out of time, and it's a great place to end on that. Or maybe for me to might push one more in, but this one. So the way that we
do actually want to know the deadline date as well for enrolling. So
sure. So go over to retirementplanb.com, watch the free video series. You'll get a lot of value out of that. And then also at the end of it, it gives you a link to where you can find out exactly what we're doing at Retirement Plan B. The first thing we wanted to do, our first strategic goal, was not to create products that people don't understand. Because we've done that before at Bank to the Future. We found that as hard as we try to help people understand what investing in private equity means, inevitably some people just tick boxes, don't read, and end up with a product that they don't understand, which we get very upset about, because we do everything we can. We even make the people pass a quiz before they invest to make sure they understand the nature of the product. And we test on their suitability and all sorts of stuff that we've tried to do over the years. But the same thing, most people are just looking for quick solutions, and that's what drives people to investing in pension products in the first place, because they don't even want to think about it. They want to hand their money over to other people who inevitably end up not necessarily having your best interest and charging extortionate fees. And and the whole pension industry works off that premise that nobody knows what the hell they're investing in or what their pension is. So the way we wanted to do it is we wanted to build education so that people understand it. Then we wanted to build technology that allows people to actually implement it. And then finally, it might take us a couple of years. We wanted to look at maybe doing a managed fund where we can do it for people. And that's kind of our roadmap for the next 3 years. But we're starting now today with education. So we wanted to do it in 2 ways. First way is those that are not in a position to be able to work on all this right now, but they want to understand it. We created the free video series. Those that are actually ready to action it right now, and they've got a minimum of savings or a minimum of commitment of that they want to do, then we have the coaching program, which has gone live today, and we'll be sending out an email to all that register at retirementplanb.com. And we're going to be taking on, for the next 6 days. And then we're going to be actually doing the first set of clients in January, starting the 4th of January. But we have to have a limited time frame because we want to take on, those that we can then service throughout January and February. And all of that is outlined, and I missed lots of details. So make sure you go through that. And we've put a lot of details there so you can read through it. But to be clear, it's not actually, we're not doing a retirement plan product for you at this stage. We're given an online coaching program on how to do it. Then we'll be releasing the technology, and eventually we might create a fund, but we'd rather people have the education and the tools to be able to do it themselves in an easy way that fits in with your life rather than having to become a full-time investor.
So just to get that straight, the deadline for enrolling or registering for the live coaching program?
6 days from today. I think it's midnight next Wednesday, midnight GMT.
Cool. And then after that, it's just an online access, like you just pay and it's just online. It's not live, basically, right?
Yeah, well, we haven't thought beyond the first set of enrollments yet. Firstly, we just want to take our first set of clients and work with a group of people that want to be on that, and then we'll figure out if the demand is there, which it seems like it certainly is. We'll figure out how we can take on the second set of clients. But firstly, we just focus on the first set of clients so that we can deliver the best service we can put together.
All right, so we are actually coming to the end. We are actually at the end. But Simon, I have 2 burning questions. We are at the end of the year. This is the last live, right? So the burning questions are, when is the portfolio feature going to be released or working or functioning? Yeah. And the other one is secondary market for US investors. What's happening there?
Okay, great questions from our community. So again, so our roadmap from here is we have to spend the next, I say Q1, purely on technical changes in order to meet upcoming regulatory requirements. And release new products. So, the technical requirements and able to compliantly be able to meet that. I think that's going to be the next quarter. We've had portfolio in the roadmap for a long time. And the background is we had to, when we launched the secondary market, we had to restructure the whole platform, but we wanted to release it in stages. And then regulations got in the way of us being able to focus on product. So Q2, we have penciled out that time to spend at least 3 to 6 months to build the best portfolio that we could build for you. We know what you need. We've had it in the roadmap for a long time. It does require a ginormous restructuring. It looks like a really simple thing to do, but there's a lot of complications behind the hood. So that user experience we will be working on from Q2. And I have to put the caveat in, as long as regulators don't give us something that diverts our attention away from delivering the best products we can deliver for you. And so that's that. Now, in terms of US secondary market, I think that's quite a long way down the line. So the current rules are that if a deal is compliant with US regulations and the pitch wants to take on US investors, which most of them throughout 2020 did, then you can invest into primary markets, and we have an SEC registered broker dealer that does the onboarding. And after 1 year, there's a 1 year lock-in period. Then you can sell shares if it reaches the secondary market. So that is available for US investors to actually sell should they meet all the US requirements. We do not allow US investors to purchase because we do not have the regulatory applications. And unfortunately, the US regulations would screw it up for everybody else. because the restrictions at the moment on what you need to do in order to make that available would mean that we'd have a much worse secondary market for all the non-US customers. And we don't want to do that. And so we've always tried to, comply local and make sure we're not restricting unless your jurisdiction requires it. And so the roadmap there does actually require a shift in the SEC's appetite to actually change some of the rules that make the secondary market really restrictive to our non-US customers. Once they make those shifts, then we will be, working with our US broker dealer to try and make such opportunities available. So unfortunately, I don't see that happening in 2021, and it's not a strategic priority for us, unfortunately. You need to see a lot more changes with your regulators. And the great news is that those changes are actually starting to come through with a more crypto-friendly SEC coming. I'm forecasting coming throughout 2021. So thanks, Amita. That's all we got. I think we went over. I think we covered a lot of useful grounds here. Hope you enjoyed this. This is. I hope you have an amazing Christmas. A happy New Year. Enjoy the holidays. It's a very interesting time in financial history, and we want to make sure that you're on the right side of some of that change. And we'll be back in the new year to bring you episode 81 of Bank to the Future Live. Thanks, everybody.